Hello, fellow traders. Tis I, the Rumpled One, coming to you on Wednesday, May the 11th. The year's 2022. Let's talk trading. Risk Part 7 with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, I think I ended the video saying that, I need to talk about how staying in a trade is risky. And I think you said there was a couple examples why happened this morning.
Oh yeah, this morning, I was up big. I had more than made my goal by probably about 3 to 4 times what my actual goal was for the day, and I went and took another trade, which is fine, no problem. I was actually up on that trade. You know, I don't remember exactly how much, but I was up to the point where I was thinking about getting out. And I said, nah, I think I'm going to stay here. It looks good to me. And in one tick, the market dropped 22 pips in one tick. And the thing is, I had a stop loss in place, but it blew past my stop loss by good 10 pips, at least 10 pips, if not more. Had to be closer to 15 pips. It blew past it, just annihilated my stop loss. Didn't take me out until I was all the way down at the bottom of it all, and next thing I know, I was, instead of having a really good day, I was having a really crappy day, but that's just part of trading, I guess. I hate to say it, but that's the risk, and that's what can happen, and I hate to say it, but the reality is that stop losses are not necessarily always honored. If there's not somebody on the other side to go and take that trade, well, guess what? It doesn't get taken. There's nobody buying. I was in a short. I was in a buy, and it dropped like that. But if I tried to go and sell at that point, but there's nobody that's willing to buy it, tough luck. It's sort of like going to the market, and you try to go buy tomatoes, but there's no tomatoes on the stand to buy. Guess what? You don't get any tomatoes.
well,
You know,
the
and
well, the thing is, you have to understand something. In Forex, the stops are market orders. They're not really limit orders. But like
correct.
if you were in a more regulated market, those stops, price can't move past your stop
Right.
without
Although
filling
I've
your
seen,
stop.
yeah, exactly. And so you can go and find yourself in a little bit of trouble because of that. And I talked about this a couple of times this week, if not last week, and it's this idea of not using all your gunpowder. And I used it from the perspective of, you may want to get into another trade, but later on. But the other part of it is, just because you can go and put, X lots on, if I put my full load on, what I was able to go and trade, I would, I'm not saying it would wipe out my account. It wouldn't have wiped out my account, but it certainly would have wiped out my month's earnings, and so you got to be very, very careful with that. And you need to go and just, keep that in mind, and, and put your stops in place the right way, and put the amount that you're risking in terms of lots there at the same time, or in other words, the amount of money that you're willing to go and try to risk.
Yeah, and notice that the pound's moving up. Are you in a trade right now?
I am not. No.
No.
I said this to you in a text message this morning, Kiero, that I think the market today is on the MMDA because it's just schizophrenic. It's just all over the place, doing crazy stuff.
Right.
It's going up, it's going down, and we had that huge drop last hour. And what was interesting about that huge drop, again in one tick, this time it dropped 60 something pips. I don't remember the exact number, but it dropped 60 something pips in one tick. Okay. But the interesting thing about that was the spread never went up. The spread stayed the same. When I say it stayed the same, I'm on an ECN, and so my spreads are pretty tight anyway. But it may have gone up maybe 1 or 2 points, which is nothing. Normally you see a move like that, you're expecting to see a spread go up 15, 20, 30 pips. I've seen that, and it just didn't. So that was based on news. So at least that was explainable as to what happened. But if you look at it now, we got a bunch of huge return bars out there. It just filled one. It's all the way to the midpoint of the other one that on that big drop. So it's just recovering from where it was.
Yeah, that's a lot of times that'll happen on those news days that people
Yeah,
like overreact and the market comes back to where it was.
yeah, and I have a friend who told me once that part of the reason why he does that, and I don't know if it's true or not. I don't think he knows if it's true or not, but his rationale of what's happening is that the retailers overreact and the bankers put it back where they want it. So that very well may be true. If every retailer goes and says, "Oh my gosh, look at that number,"
Mhm.
and force it all in one direction, well, bankers will say, "So what? I don't care. I don't have stop losses in the market anyway. I've got enough capital behind me. I can absorb a 60, 70. In fact, I can go and absorb 1,000 pip loss. Well, not a loss, but 1,000 pip
Move.
paper loss.
Yeah.
Yeah, exactly. And then, but I also know that I got enough gunpowder out there that I can push it back to where it was. And here we go. We're going right back to where it was. We're back up to the 40 already.
Well, I've just been watching, when we talk about risk, so especially on a day like today, it was at 3 bars ago, this wick almost painted in one move. So if you were sitting there with, it's at 37 and you turn right around and it's at 23 or 25, whatever it did, you're going to be disappointed. So it's like
Oh yeah,
sometimes you just got to take your profit when you
yeah.
can,
You're
and
you're
not
exactly right.
because time in a trade is risk because you are exposed to the whim of the market.
That's exactly right. And you're exactly right, Giro. Because the thing is, every minute you're in is another minute that the market can go do something wacky.
Every
All it
tick
takes
you're
is,
in, not minute,
oh
every
yeah,
tick. You just proved that
yeah,
or witnessed that this morning.
oh yeah. Well, I proved it too with my big loss that I had to go make up. But yeah, you're exactly right. It does, and I don't want to say it's a probability, but it's you're playing an odds game here, and we do know that all it takes is for some person with a tremendous amount of pull to go and have a bad day and cause a cascade to go and happen.
Yeah,
We're talking about a market that's unregulated, so there's even more room for that to occur.
yeah, yeah. Like you said, or there could be one fat finger trade or one computer glitch.
Oh yeah, you think about some of the computer, even in the stock market, which is highly regulated. Think about the number of times in the past where there was a coding error for some bank or something like that caused a huge drop, a huge sell off, or a huge buy, because it's happened both ways. And then what happens is some other banker says, "Oh, look at what that bank's doing. They know something I don't know. I need to get on board." And it drives it even further. And then all of a sudden people realize, "Oh, shoot, that was just a mistake. That was just a computer error." Then it causes a massive sell off or a massive buy on.
Right.
But the thing is, we as retailers, they can go and absorb those things. We can't. So we have to play it a little bit closer to the vest, and we have to, we have to go and protect ourselves, and we protect ourselves with how we do our risk management. And again, I know I've said it a bunch of times, but I'm gonna say it again because it's so important. Risk management is not just your stop losses; it's more than your stop loss. Okay, it's your stop loss plus how much are you willing to go and risk in terms of, well, not how much you're willing to risk, but how much do you go and put in on the trade? Because, let's say if it drops, let's say it goes and drops 100 points or 100 pips rather, and you're in a situation where, it drops 100 pips and you're in for one lot. Okay, that's $1,000. Okay, what if it drops 100 pips and you're in at 10 lots? Well, that's a big difference. Now you're talking about 100 times 100. So now that'll wipe out most people's accounts. So you got to be careful there.
That's an interesting question. I wonder what the average Forex account size is.
That I don't know.
I
I
wonder
have no idea.
I wonder if there's a statistic out there somewhere. I have to
Yeah.
try Mr. Google. Or
It
is
would
it?
be interesting to know what the viewers of these videos say it is for themselves. You know, I don't want anybody to go and out themselves, but it'd be an interesting number to know.
Yeah, it's like are you? Well, I mean, you could say you're either three, four, five, six, seven figure or more.
Right. Yeah, you could do that. But at the same time, it's like some people hold those things pretty close to the vest, and I understand that because I do that as well.
Right.
Because it's not anybody's business other than your own, because it's your
True.
own money that you're risking.
Right. I agree. Okay, now we're in the launch pad. That was a 2 pip move from
Yeah.
39 to 41. And there's a 4 pip move back down to 37. Look at that.
Yeah, it's just, and yet the spread. Look at the spread. The spread's not moving. I mean, it's moving, but it's not like it's moving 4 or 5 pips. It's not crazy like that. It's just that's just what the market's in a very very volatile time right now, and that's just because I think of the world economics of everything going on geopolitically. And it's causing these great moves that are happening. People are trying to vie and figure out where they want to go and put their money. Even, and a lot of corporations, I think, are doing the same thing. They're just out there just trying to figure out, where am I going to go? Where's the safe haven at this point in time? And so for that reason, the market's going to move back and forth like that.
Yeah, I think you might be onto something there.
Just nobody knows what's going on. I'll go biblical on people for a second and just say, the Bible says that there's going to be a time when there's wars and natural disasters and rumors of wars and natural disasters. Well, it seems like we're at that point right now.
Right.
It's just everywhere we turn, we see some craziness happening in the news, or somebody saying that it's going to happen.
Right.
So, hey, we covered that entire drop.
I believe it. I see. We're at 55.
Yeah, exactly. So it just shows you, how quickly this can go and change. Just at this time last hour, we were all the way down at the bottom down there, all the way down to 2280. So in the course of about a half hour, we've covered that entire drop. So, which is just amazing that it can come back that quick. Now, the great thing about that is that there's lots of money there that could have been made. I mean, if I had gone into a trade right before this hour started, or even after this hour started, and I took a lower high box trade, I mean, and if I stuck it out and just used that method of using what you call mid dots, as long as it doesn't cross the mid dot, stay in the trade. Once it crosses the mid dot, get out. Shoot, you could have been up 60 pips. Would have been a really nice trade. Yeah. And that's how God forbid you get into a situation where you get slammed, that by a big drop like that. That's how you get out of this, because, you take the big loss, but as long as you haven't used all your gunpowder up and you still got some room to trade, that's how you make that trade up, because more times than not, when you get a big sell-off like that, it goes back up there, and what you do is you look and wait for the opportunity. And when you get the opportunity, you go and take it in the other direction, and you look for that. You just look for it and go in on it. Now, you may not get all of it, but if you get half your money back, that's a good day. You can't help when the market does what the market does, but what you can do is trade well. And if you trade well, you can go and make some of that money up. So let's say you went and took that big loss there, okay, and you made half your money back. I would say that's good trading.
Yeah, and guess what? I guess we must have had fun, because the fastest 15 minutes in trading is up again. So, fellow traders, just remember, when you're in a trade, you're at risk. You are risking, and as we've seen, sometimes the stop loss isn't enough. So just keep that in mind, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.